day yesterday, big day Wednesday with the results of what the Fed did with interest rates. The market's trying to absorb what, where, when, how, what we're going to do next. So they continued a little rally yesterday, and we'll see where we to go going forward. Just hang here for a little bit, absorb all this big move. We shall see. We shall see. All right. We are welcome some of the new folks that are here. We're trading mini S&Ps. We're looking for opportunity to scalp the market based on the levels we just gave out, in addition to any price action trades that might occur. I mentioned both of those. This is our setups for this morning. You can see the market it's kind of hanging here a little bit. See where it wants to go next. Kind of hanging here at the lows, a little support down at the 55 area. Let's see if we have any other numbers coming out this morning. We have nothing coming out this morning, so there you go. It is what it is. After a very busy week, that's for sure. A busy last couple of days. It was kind of quiet at the beginning, kind of waiting for all this stuff to play themselves out. And we're going back up here, hanging around our pivot. If anybody has any questions, feel free to ask in the chat. We are scalping mini S&Ps, which is a equity futures contract, trying to take advantage of ebbs and flows of the market. Right now, we're looking at about 2 or 3 points on our trades here, and that could change depending on volatility. We talked about that yesterday, and it's a little more volatile. And so we have to expand our stops a little bit so we can stay in the game. We're not expanding our stops because, we have to. It's just we need to absorb some of the extra volatility that comes into the market when the markets move around a little bit quicker, and you have to absorb kind of the give a little in these markets when you're trading electronically here. So a little support down at the 55 area if we get down there. And whatever trades we decide to put on, we're always using stops. So we're not going to love any trade we put on. What we're trying to do here is take advantage of these ebbs and flows. If anybody has any questions, please feel free to ask in the chat. Look at the chat. 58.10, yes. We'll get the levels up here in a second for us. There they are. Thanks. So the question to DL, that we're right on top of each other. I would use it the same way I would do level, with scaling around. So the best way, or if you don't want to scale in, just kind of take the median price. And if it doesn't get up there, then just cancel it. If it gets up there, great. So, I mean, it again depends on your risk, what you're willing to, what risk you're taking. You can do both of them, or you can just take the medium in the middle of that and go with that. And you can see how blue band and our arrow comes in there. So they're all layered in there. See what it wants to do.
Did I mess you up yesterday?
Why is that?
Well, I thought you had left and had to go do something real quick, and I just stepped in. I'm just talking away, and
No,
but I couldn't.
you asked me a question and I answered it, and then you answered it. I answered it right away, and then you say, "Oh, you must have stepped away." I wasn't, and it
Uh,
was like I was talking to. I answered your question about my granddaughter right
yeah.
away, and then you didn't hear me. Like we just were
Well,
conversing.
that's what I was asking. I'm going. Has he been back all this time, and I just been stepping on him?
No, 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 no. I was
Okay.
like surprised that you didn't hear me. That's why it didn't make any sense. So no, no, it was just a glitch in the something in the computer. It wasn't our fault. Never our
Okay.
fault.
Okay. Good. I like that. I like that theory. Do like everybody else. We can blame it on Trump.
Yeah, blame it on Trump. Blame the computer. Damn computer. I don't know
Uh,
why it's not starting. I pressed the button. It's not working.
well, did yesterday all of a sudden you just kind of went blank, and I said, well, maybe he had to step away for something. And,
Yeah, so I don't know. I don't know if it's me. I think it's more Zoom sometimes, or the connections. Sometimes I guess I lose my connection here, momentarily. I don't know. It's cyberspace. That's all I can say. There's no explanation for it.
I know the feeling.
All right, we're just kind of range bound here a little bit. While the term transitory is falling out of favor with the word recalibrate is now in vogue. Chairman Powell used the expression a total of 10 times during his post-meeting press conference on Wednesday, and the markets are just loving it. Some time was needed to digest the new phrase, but it seems like it'll be one to add to the central bank's lexicon going forward. Recalibrate. The Fed's past policy stance is being recalibrated to lower for longer to support the labor market. The economic growth and long-term initially resurfaced. The easing cycle should continue through 2026 and beyond. Accommodative stance is unleashing some animal spirits with bullish forces igniting hopes of a soft landing, healthy corporate profits, and resurgent growth. We've got a mouthful of happiness right now. That is a mouthful of happiness right there.
Amen on that.
And man, there's one paragraph that says, "Come get me. I'm going to 6,100."
I'm just amazed at where we're at.
Yeah, so am I. Absolutely. I totally agree with you. Risk assets responded in kind on Thursday and then some. The Dow Jones Industrial hit 42,000 for the first time in its history. The S&P scored its 39th record close of the year, and the year-to-date gains for the Nasdaq Composite also returned 20%, fueled by a rally in tech stocks. Economic data on the labor market further boosted sentiments, with the number of Americans filing for initial jobless claims falling for the lowest level since May. Everything is hunky dory as we are slowly up to here with resistance, our upside resistance up at 71. Nibbled here against our blue band here, right up to 76.67 here. Came off. Blue band there, we talked about how you trade that minutes ago. And if you did jump in right there at 67, you got a nice quick rotation. Now our green one's coming at 8.5. We have resistance at 71, so you can see we kind of layered in some resistance up here at this level. This area, I should say, it's kind of range boundish, top end of the range, middle of the range, depending on how you look at it. It's been pretty much quiet this whole past few hours. We'll go back to what JP Morgan said yesterday, biggest threat to the U.S. market is not soft landing or not, but rather the geopolitical situation. At some point, it's amazing how the market is kind of ignored, ignored Ukraine, ignored what's happening in Israel, and it's ignored it from the beginning when the Ukraine war started. Everything about the geopolitical situation there affects, doesn't affect community, at least for the time being, unless people start ganging up on each other, which who knows. This war's been the Ukraine situation has been going on too long, that's for sure, and so is the Israel situation. Israel now seems to want to expand it to the north. It's a scary situation. That continues because now you're jumping in on Iran getting involved there. Their proxies that are involved in that area. Just not a good situation anyway. That's got to also come to an end. All this stuff's got to somehow throttle down. It's not going to.
It makes you wonder sometimes. You see the news and you see the pictures of the tunnels and everything. You think, how long did it take them to dig all this mess? It's not a block long. They're miles long.
Hundreds of miles.
Are they?
Yeah.
Man.
I mean, it's amazing what they did. I mean, think about the time and the construction of them they're not skimpy.
Yeah.
And they're not only not skimpy, they're also very deep into the ground. I mean, that's a lot of money, a lot of time and effort, and some of them can fit trucks in there. Like you can drive through the tunnel.
It just makes you wonder what they did with all the dirt they dug out of the hole.
All the dirt and all the money that went into it. I mean, it's absolutely amazing. And for what reason?
Yeah.
Right? For what reason? No, it wasn't any good. It's pretty amazing. It literally is amazing. I mean, you're talking about 7-mile long piece of land and I don't know, 5 miles wide, and they have hundreds of miles of tunnels. I mean, absolutely unfathomable. It's just amazing.
If the tunnels give way below it, the top's just going to crumble.
You would think, right? But they
Yeah.
built them. But they reinforced them. I mean, this was projects. It's amazing how people didn't notice it or didn't know about it. I mean, I can't imagine people did not know.
It's kind of hard to see dump trucks, loads of dirt coming out. You're going, okay, what are y'all doing?
Right. I mean, yeah, it's amazing. It took years. I mean, they got the land in 2005, so it took them 20 years, 15 years. But it's been a process. It's just amazing. And for what reason? Not a good one. not a good one. Yeah, so that's one problem, and then now they're as well as going out to the north now to deal with other block. It's just amazing. I don't understand how they just fight each other. All right, well, we're range bound. We got up to right at blue band there. Somebody asked about our blue band. Nice trade if you jumped in. I gave a little bit of good concepts. Against it. We didn't get up to our 71. We're back here at our pivot. So quiet, no numbers coming out this morning. And Friday maybe absorbing what it's happened all week. Interesting about all of this, gold is up to all-time highs here. Yeah, hedge against inflation or a hedge against fluctuation. And they've been in a steady path upwards. It's up to as good as the S&P rally. It can go right up there as far as percentages are concerned. It might be even better. The interesting thing about the bond market, they they rallied 15 basis points, and so bonds prices went half down. And the 30-year, the 10-year rallied from 360 60 to 375 area. I mean, it's the first time they say, well, that happened. Other time that they cut 50 basis points in the S&P and the bond rates rally. That was in 2008. What correlation that makes, but 2008 obviously was the financial crisis. The bond yields did go up. They were trading around 360 and 10s, 375. They lowered now you could say that it was an inverse relationship, bonds and S&Ps, which I can understand that. Especially now that we're starting to see that more often. A little bit more often. We have 55 here on downside support. And do anything, make sure you keep your stops in place. Which is our scalping and very reflection, great opportunity. Right, long. Managing the risk is how you keep the risk low and trade with some and then make money and then steals. Alright, inching its way down there, got down to 7.25. Stopping. Very, very choppy, very, very range bound. Nothing really to get too excited about. What's the VIX there, Don?
1614.
16. Start getting into that 12 area again, that's not good. But it will, I mean, if we continue to rally. But, 16 is still okay. High teens will be better, but 18 yesterday was good. Rally markets, I said, are very difficult to trade for us. We don't get those ebbs and flows that we're like. Obviously, day after announcement of the Fed stuff, you got ebbs and flows. If we start slowly upticking and slowly marching forward, the VIX is going to go lower. We're going to have very good patience. And say, volatility will come back. The market will just have to worry about that. Well, if anybody has any questions, feel free to ask in the chat. Any questions? Just kind of hanging here on this low, a little support down here at the 55 area. We got a little bit of a sale there. It started moving to aggressive. 67 area. Just a little rotation after that. Up there. Profit taking here in the market might not be the worst idea considering Friday. But we shall see.
Yeah, this is rollover day.
Oh, good.
Triple witching.
Whatever that means. These option guys are great.
I gotta hand it to them. They got a pretty good crystal ball.
The option guys.
Yeah. They seem to know what's fixing to happen before it happens.
Nah, they take the same amount of bets we do.
Do they?
Yeah, you know, I mean, they put on their spreads, you know, their fancy spreads, and condos and butterflies and the dolphins and eagles.
The
Put on
Falcons.
these, they put on these fancy spreads, and you know, they're looking. They protect themselves. Let's put it that way. You know, they do protect themselves. Very complex. You have to. I tried to dabble into that for a bit there, and finally came to the conclusion which was a lot easier for me to comprehend, and I get a bigger bang for my money faster than putting. You know, you have to buy, and you have to sell, and you have to put in. When you're doing options, you have to actually buy that stuff.
Yeah.
I mean, obviously, you could sell the premium, and that comes into your account. But then it's risky because that's like an open-ended short position. And then obviously, if you're selling an option, a call or a put, it doesn't necessarily mean it's an open-ended sell position. But I'm saying that you have to be careful there. Again, different ways of trading options there.
You know, I can't imagine being any other place besides in the E-minis.
Yeah, yeah. I mean, you know what? It's a good area. It moves. Gives you opportunity. It's liquid. Some market. I mean, the only time that this market is not liquid is when there's a number and there's no bids and offers. Like it's very thinned out. But those are the times we kind of ask to stay away from those trades because we can't compete with those computers. So, yeah, I mean, we can make an adjustment. Well, we got down to 57 and a quarter. Yeah, I mean, if you're a little risk averse, yeah, lighten the load there at 56 or just leave the 50. Again, it's up to you. It's pretty slow. It's not really much. But you never know. But yeah, if you're more risk averse, I would get out of 56. Yeah, 58. We did get down to 57. I didn't realize. Wait, I'm looking at the wrong thing. 55. Yeah, 56 would be our first entry. So again, if you're a little risk averse, you got to be a little careful. Yeah, I mean, that's a very thin market too.
I can't trade the NQ. I can't count that high. Up here, 20,000. That's amazing.
Mm-hmm. No, making it 1,042.
Yeah.
All right, going down here, we'll support here at what it wants to do. And there are lows in chat for us. Just real sneaky. Double bottom there. 7. Bulls and Bears are fighting. Having a little tug of war. Wearing these clothes. Alright, now we're trying to inch down here. Got a little support around again. 55 cents in the chat. There are no doors tonight this morning. Been a very busy week. Make sure you put the tops in place. Take some profit through trading on contracts. I'm trying to get us a little bit of rotation here. Definitely if you got into before you're taking some profits here. Let's go here a little bit more. Push on. Down here a little bit. 46. Again, like I said, decent profits there. Just get out of the trade. Maybe a little bit of rotation up there. The 56 up to 55. And if you got in there 54. Like a price action. I would say that for a reason. Moment. That's when you make the adjustment really quickly as you're trading. You make a little bit of money. Get out of there trading. Scratch it a little bit. Done. It's an option. Well, also level we're looking at up to 46 area.
A question for you.
Mm.
The SEP contracts shut down at 57.0250. Now, since we're trading 60 points above it, will these two contracts eventually go together at some point in time? Will that 57.02 come into play in this contract?
No,
Okay.
because the averages, they call it weighted average, subcontract. So
Yeah.
the thing is this: if you most people when they are trading futures, they usually sell and buy. You don't have any position left, right?
Yeah.
The futures market was there to hedge against market volatility or any kind of market. If you're trading soybeans or oil or any kind of other commodity that they have contracts for, which now they have commodities for everything. There's always been there to hedge against for the players that need it. Like the banks are hedging against interest rate fluctuation. If you own some stock equity funds, you're hedging against, if you're short and the market goes up, you're buying the futures contract. And so these people, they actually, when they expire, and they actually they want to get paid off. And like most of the time, you don't usually keep a contract. Like the example I have is when somebody like they have soybeans with the farmers, right?
Yeah.
The futures industry started because of the farmers.
Correct.
And, back in the 80s, late 1800s, maybe 1900s, and they opened up the futures market so that the farmers can hedge against, they have their crops in spring, but they don't sell them till the fall, and by the time they sell them, the prices go down. So you go and sell, the futures contract in you're harvesting, and by the time you bring it to the market, the prices already go down because the supply is there. So if you sell the contract and somebody needs to buy it from you. So, but as a farmer, if you sell 1,000 bushels on a contract, you have to have 1,000 bushels to deliver it to somebody who's buying it because somebody has the other side.
Yep.
So if you leave a contract to expire, right, and you sold the contract, you have to come up with 5,000 or 1,000 bushels of soybeans or corn, whatever it is, to deliver it to somebody on the other side because they didn't sell it either. So somebody's going to have to, as a farmer, if you sell a contract of 1,000 bushels of soybeans, you got to make sure you have them so you can give them away. So that's what these farmers did. They sold the contracts, but they also knew that if the prices if the price was lower, then they would buy it back and they would sell their product at the market price, and they would make the difference. But if they didn't, they would have to actually give the 5,000 contracts of soybeans or 1,000 bushels of soybeans to somebody. And they give it to the grain master, and then he delivers it to somebody. So if you have, to try to put it in stocks, a basket of stocks like the S&P 500 is, you have to give those baskets. You're going to keep it till expiration. You have to make sure you have them in your inventory to give whoever wants them. If you didn't get out of your contract, then you have to give them to somebody. You have to make sure you have all those contracts, all those stocks to give to somebody. So technically, somebody has to have them. And if you keep it till expiration and you don't get out of them, you don't get flat, then you're going to have to deliver those number of stocks to somebody, the basket of stocks to somebody, like another hedge fund or another. I mean, these guys have clearinghouses that take care of all that stuff. So I'll give you the example. They had some soybean trader. I don't know how. This was before computers, obviously, and it was before a way of knowing that you have any positions on. Surprisingly, he forgot that he had one contract of soybeans that expired. So so the next day, after the contract expired, the soybean company, they went and delivered 5,000 bushels of soybeans on his front lawn, because he still had that one contract of soybeans that he didn't get out of, and it expired. So they dumped 5,000 bushels of corn or soybeans, depending on whatever contract, right on his front lawn. And trust me, it wasn't good, because it was in a suburb of a big city, and he had to and he had to pay for them. He had to pay for them, whatever the price was, 5,000 bushels times, let's say $3 a bushel. You had to pay $15,000, and you had to pay for it. So
plus the shipping.
Yeah, now you have to plus the ship, exactly. So now you have to get rid of it. So it cost them. But again, that was a mistake that happened because accounting was totally different at the time. People didn't know. Now the clearing firms make sure you're going to have a position on, and the rollover comes, and you want to keep that position, that you roll over your position to the next contract month. Otherwise, you're going to get either a basket of stocks or 5,000 bushels of soybeans dumped on your front lawn. And it has happened. It's not like that. That is a true story. Somebody forgot to get out of his, the expiration came and the contract went out, and he still had one contract left, and they dumped 5,000 bushels because that's what they do. So you better make sure you're flat at the end of the day. Nowadays, it's a lot easier because the firm doesn't allow, everything's computerized. You can't even shut your computer down sometimes because you have a position on it without it telling you you're not flat yet.
Oh, yeah.
Which again is good and bad, because like I said the other day when I was talking about my clerk, sometimes it happened maybe 2 or 3 times in 20 some years of trading that I would actually think that we both thought I was flat at the end of the day, and I ended up having a position totally accidental. I mean, I'm counting and she's counting, and somehow we missed something, and we both missed it. And of course, I got a position on overnight. I come back the next day, and it always goes against me, no matter what. I just want you to know, no matter what outtrade you had or accidental position you might have, it's always against you. And my classic one was, this is date me a little bit here, because this is 1987, the first crash. I don't know if you guys remember the first crash when the Dow was trading around. I think it was 1,500 The Dow was trading 1,500 or so. It went down 500 points in one day. It was Black Thursday, right? And I was trading that day. I was trading bonds, and of course, what happens? It was a crazy day, and everything's crazy. And there was night trading at the time where you go in the futures trading at night. And my clerk calls me up, and thank God I had my clerk who calls me up, who's with my clerk at, you have your clerk that checks your stuff every day, and then you have your clerk from the exchange, from your clearinghouse, make sure you're okay the next morning, right? As we drift back down here to the lows, we've got support down here at 46. He calls me up at like 7 o'clock. He says, by the way, you are short 2 contracts. What? I mean, I'm short 2. Yeah, and the market is limit up.
Oh,
Okay, I'm like, what? And, of course, now you don't know what limit up is, but you couldn't. Well, there are limits in the market these days. It's 7.5%. It's crazy. That's another story. Anyway, they were limit up. They were up 3 points at the time. It was limit up. So I was short 2 contracts and we were limit up. So that's a loss of $6,000 right there without even me like saying it. On 2 contracts. Okay, 3 limit up $2,000. So he goes, you better, you gotta get out. So, okay, I know. Well, how do we get out? We have to come down here. So you go down there, and when you're limit up, everybody's bid. There's nobody's selling it. I gotta buy it. So I went to a couple broker friends who were trading at night, and I told them, look, I'm stuck. Maybe if somebody was selling something, you could. I need to get 2 contracts. I'm just stuck. I'm miscounted. So the market, remember, it's limit up for 2 contracts. I lose $6,000 if I buy it. I was able to buy it. It goes off the limit for 10 seconds. Somebody had like sold, I don't know, 1,000 came up. Everybody gobbled them up. I was lucky enough to get my 2 contracts, right? And it went limit up for the next 4 days.
oh.
Which means I couldn't, as we drift down, which means that 2 lot that cost me $6,000 would have cost me literally $24,000 on a 2 lot if I didn't get out that night. And he didn't even trade for the next 3-4 days because there was no trade because it was limit up every day. Because the Fed, as we come down here, drift down here to the 46 area, because the Fed kept lowering rates. That was when Greenspan lower rates because he had to counteract the big sell-off in the market. Quickly drift down here to the 46 area. Again, make sure you keep your stops in place. We're not loving any trade we put on. Keep saying that for a reason. Yeah, that was my limit up story. Yeah, it's a good thing I got literally came off a limit for like 10 seconds. Somebody needed to sell something, and everybody called them up. I was standing. I asked 3-4 brokers around the pit. Luckily, one of them was standing around. And I told them to get out. So, trying to give us a couple points here on this 46. But yeah, I was so thankful that I was able to get out. That would have been terrible to try to sleep the next day or the next week without knowing that you're losing $6,000 every day you come into work without even doing anything. All right, there's a couple points there for us. Took a little bit. Nah, they didn't take anything. You can get a little bit more here on this. So again, just stay focused. We kind of maybe made a little bit of money. Maybe you got stopped out on the 55. Maybe you just scratched it. Maybe giving us a little 3 points here. But this is where you have to stay focused and always look for the next opportunity. I'm excited. I'm sad. Just kind of trade the market. Put your stops in place. That way we can minimize losses. And when we have an opportunity like this where you can make money, and some. So try All right, so nice rotation there against 46. you want to try to stay long, you could have a trailing stop, but don't lose any money in the trade. What you want to do here. So anybody have any questions? Feel free to ask in the chat. I'm saying a lot of stories. Yeah, try to stay long. If you're not going to lose any money on the trade, only if you have a runner, only if you have extra contracts. Those things come into play. Keep that in mind when trading. Alright, trying to help the gear again. If you're trying to stay long, then just stay long a little bit. Trying to stay control. And then contract which you might have. Yes. I remember that day. That was such a unique day. It's never happened. Such a crazy day in the bond market. Bond masses. So here's when the Edinburgh trade happened. That was never. Bonds were going down like crazy. Crazy day trading. Very busy. Everybody kept looking at it does feel like it's just such a when you're trading and you see numbers like that you've never seen before, it is disheartening. You know, you're really down, especially when you're so close to it. So again, if you're trying to stay a little long here against the 46 area, a good place to get out. If it gets above here, obviously, higher, but definitely a good place to get out. Runner that you got going here, a nice rotation. You just took some profits against the 46, nothing wrong with that either. Just a matter of getting out of your bad trade and getting into your good one and staying in business. Stay focused. That's all we can do. Trade there. And if anybody has any questions, again, feel free to ask in the chat. Question. target from inflection areas that create opportunity for the scalp, 2 to 3 stops, minimally 2 to 3 point profit targets. And like I said, maybe a little more if you are trading multiple contracts and kind of follow a runner. Particular resistance would be around pivot area there. All right, again, coming up here, little resistance around 61 right now, kind of flat right now. So it's gonna take a little touch again. If you 6. Hold on if you could. And one. questions, please feel free to ask. Just trying to take advantage of the ebbs and flows. Unless there was, I know, then anything could happen.
Hey, quick shout out to John M. Hey, John M, any questions about our services? Viviana? Here's your chat picture to respond.
Here. How did I start in markets? Question. Well, it does go back. Well, first of all, I went to school in Illinois. Exchanges. At the time, I took actually a futures class in college, University of Illinois, and one aspect of the course was to take a trip down to the floor of the exchange. So, obviously, taking the course and the technicalities of futures trading that has nothing to do with futures trading. But
Hey, Viviana, let's knock you back. John M saying.
so
join us to our socials, like us, share us, repost us.
Can you hear me all right? Somebody?
Yeah, I can hear you.
Okay.
You're kind of low, but I can hear you.
So,
There you go.
so in the middle of that, the course, they decide to, take us to the Florida Exchange for a little tour. So I was like, okay, so we go on this tour and kind of liked it, loved it. As a matter of fact, I thought it was novel, exciting, interesting. And so I go back to my dad, and I was a junior at the school. And Dad, I gotta get into trading. He goes, okay, well, we gotta finish school first. So that was okay. I guess that would take care of that little problem right away. So, but the seed was planted at the time, and ended up actually I actually have a CPA, believe it or not, but I don't use that anymore. Because you needed to keep up with it. But that's what I went to school with. I had a finance and accounting degree, and so I was working for a big firm company out of school, and ended up meeting my wife, and her dad was actually a trader, and that's how I got into the business. So I said, I wanted to. I think trading would be kind of cool. I thought it was really exciting. Something I want to do. And at the time, it was a lot cheaper to get into the business than Obviously, not. Well, yeah. Well, it's a totally different situation. You have to actually become a member. You know, you have to go through a process. But it was a lot cheaper to rent a seat. The bond market was just starting at the time. It was in its infancy, and it was starting to take over, like being the biggest contract that the Board of Trade was trading. My father-in-law traded soybean bed, and so that used to be the biggest exchange, the biggest moneymaker on the Board of Trade until they started trading financial futures, and then that took off. So it was easy to get into the market, and he goes, that's where you should go into it because it's cheap to trade, the market moves around, and so okay, so that's how I got into it, believe it or not, and yeah, the rest is history.
Because your father-in-law was a trader also.
Yeah, he was a trader. He was old school trader though. He had his buddies, so stood around his buddies and just kind of waited for trades. That's what they did in the old school. He would not come into the bond market and trade. Bond market was a lot more aggressive. More younger people. So yeah, he was a trader. He was a soybean trader. Did I have a special jacket? I had a few special jackets. Yes. At the time, at the beginning, you used to wear a colored jacket that relates to the clearinghouse you're with. So a gold jacket was for Goldman, and a blue jacket was for, E.F. Hutton and E.F. Hutton. And they have different colored jackets for different firms. That originally that's how it all started. When you had different colored jackets for different firms, every colored firm had its own. Every firm had its own color jacket, and so when you started clearing somebody, that's who you knew you wore that jacket. But then if you wanted to get a special jacket, yeah, you can go get a special jacket. So I had a card jacket, cards as far as poker cards are concerned, with all kinds of cards on there, hands and poker. I had another one, a martini jacket, very colorful martini jacket. Just mentioned when my clerk picked them out, I didn't. But that's stuff that I was into it. Then I played cards, drank, associate, stuff in the queue. So those are jackets that we got. So we did have special jackets. With the whole ball of wax there. It was fun.
What was your symbols?
What was that?
What was your symbol?
Well, I didn't have a symbol. I mean, it was.
Don't they have a number or a symbol?
No, acronym. I meant the acronym. Yeah. My acronym was SSH. SSH was my acronym. Everybody had an acronym. So if I traded with Don and your acronym was DON, I would put Don as the other person I'm trading with, and then I would put, and every clearing firm had a number. Like my clearing firm had 325. So if I traded with, if you traded with me, Don, you would put down SSH and slash 325, because that would be me and then the firm.
Yeah.
Right. So if I traded with Don, it'd be DON, whatever firm number you were at. Yeah, Craig was RIN. Craig traded. You got the mark mistake. All right, jumping around here, kind of no trade zone, like I said. Nice little trade off of our support level, went up to a little resistance area that we said we get out of them. And now we're flat. We never got up to the 61 area there, which is a little short, but not anymore. And it's a good way to nice slow Friday after a busy week. Nothing like relaxing. Friday, make a little bit of money. Weekend, try to stay away from. Yesterday was a little we had to kind of hang in there. Fridays could be good or bad. I'll tell you that's for sure. Obviously, if you make money on a Friday, it's fantastic. You lose money on a Friday, and you have a weekend to think about it. It is the worst. Having a bad Friday, nothing like trading on a Friday. Bad Friday. I mean, a really bad Friday. I mean, there's some bad days, right? Then there's some bad days. I'm talking about the bad days. You have a bad day on a Friday, a normal bad day, that's fine. Right? You have a really bad day on a Friday, ugh, having to think about it the whole weekend, worst thing. Oh, you got to think about it. That's the worst part. What did I do wrong? Why did I put that trade on? Why didn't I shut my mouth? Well, for me, it was shutting my mouth. For us right now, why did I take my hand off the clicker? Why did I push the button? Idiot. You blame yourself. You over-traded. Sounding familiar?
It's called dig out of the hole Friday.
Getting out of, you over-traded. You traded way too much. You didn't listen to you. You lost all discipline. Sounding good? Sounding better?
Oh, yeah. His last name must be Jenkins.
Yeah. Have we all done all that? Yes, we have. Yes, we have. We've all done it.
What's bad about it? We think we've learned from it.
No. Comes right back at you. Oh, my new grand dog is coming over tonight.
Well, it's the one that got her arm hurt. She up and running around now?
Yeah, thank goodness she's fine.
Yeah.
I was telling the story, I don't know if you heard, that when you sometimes see kids that you grab, but both their parents grab their kids and they're with one hand, with the one arm and swinging back and forth.
Yeah.
Right. So they say, the doctors say that sometimes dislocates their kind of shoulder or something, or their wrist or something in the part. And usually kids, they, when you put them back down, it kind of gets back into place and nobody really thinks about it. It's like, it's done. Obviously they were doing the same thing with her, and it just didn't snap back in. And that's why it was she wasn't in pain, but she wasn't moving her arm.
Yeah.
So that's why she ended up, they took her in, and then by the time the doctor said, by the time they took her in there and she got to see the doctor, she was moving her arm again. But she wasn't moving her
back
arm
in place.
So it got itself back into place by itself. And but when they took her in, she wasn't using her arm, she was using the other arm, and because it was hurting her. But somehow when they put her in her car seat and they, snuck her in there and maybe it jolted it went back into place and she was fine. So, yeah, so that's what you do here. So yeah, she was fine. So I'm glad. But my grand dog's coming in. It's the first time they're taking him out of the house too. To a new house. So we'll see how he acts here. But he's so far been a good dog. And not only that, they're taking him for lessons. They're doing the right thing with him. My other daughter, no, she would not. She was going to train him herself. She did not do a good job. At least this one, they're taking him to the normal, whoever does that, and teaching him stuff like how to listen.
Listen.
All right, we said we have a little resistance on 61. We got right up there to 60. 975.
Did you answer that question from DL?
Yeah, I'm just reading it now. Well, how often will get away from you? No, that's like every time. No, you know what? You have to really be disciplined enough to say yes. I have to get out, and if it does run from you, so you are. I will try if it let's say I have 62 as my hard stop to get out, or my and it goes down. You know, I will definitely try to get out at 61 at the worst, even if you know. So uh, I try to get out at 62. I'll watch it. I'll watch it. If I see that it's you know, I put my order in. But if I miss it, I'll definitely just give it an extra point. So I'm not going to. Again, it's something you have to get used to, and if it's not something you're comfortable doing, then don't do it. But you know, it's going to cost me sometimes an extra point, maybe. But sometimes also it'll regenerate back, and I'll be able to maybe lose instead of losing 4 points, I'll lose two, and that'll make up once in a while for the extra point that I give up. So, do I expect to make it all? I mean, basically, when I'm at that point where I have to get out because it's a loss and it's my stop area. If I lose, let's say instead of losing 3 or 4 points, I lose two. I feel like it's like I made money. See how messed up my mind is. I lost money and I just made money. But that's why I try to keep myself, you know, happy that I lost money because I lost less because I traded better than I thought. Of course, you know, you have to have that discipline and have to have it every time. So yeah, so I mean, I'm not, you know, it gets to that point where, you know, it gets to that point where you know, I have my stop in there. I use a finger stop, and I say, okay, I'm gonna get out at 62. I almost got out at 62, but it went back up to 64. And even though I'm gonna still lose, you know, two points on it, but I'm like, you know what, you know, I'll lose a little less. I just like make it trade. So I turn my negative, try to turn my negative um, moment into somewhat of a positive moment by saying, okay, well, I lost a little bit less here.
That's better than digging out of a hole.
So I try not to DL, but I try not to double up. It's not. I've learned that it's the only time I would double up. To be honest with you, if we come up to another support or resistance area and they're close by. And obviously, right now these days, I don't usually have support and resistance areas. We used to. Uh, you know, not too long ago, the markets weren't moving that much. Our stops were a lot tighter. The areas of the ranges were not as big, and so you were able to sometimes, you know, it would come up right up against another support and resistance area, and that would be the only other time that I would think about doubling. But I try not to. It's not healthy.
No.
And Don doesn't like to either. He just can't help it.
Yeah. You know, really and truly, if I have to double down, I have a real conviction of where this thing's going.
Right. Like I said.
Other than that, I'm not doing it.
Right. Like I said, you have to have a good reason to double down. Like it comes up against another support and resistance area. And even then, because you're at that point, you're like, okay, what's happening here? Usually it doesn't work out. To be honest with you, I'll be honest with you. The next support, you become a little tighter with your stop at that point, right? Because you're already down from the above level or below level, and so when you double up, and even though the level might work, but you're not giving it the same amount of leeway that you should if you took the trade straight up. That's why I would rather get out of the first trade and get myself back into the second trade because it keeps me. I don't have that double up pressure. now all of a sudden the markets are moving and it's kind of the same. And that's why we always say get out of the trade, take some profits. You know, if you're gonna have a runner. Obviously, when you trade a little multiple contracts, a little bit different. So because you have to get used to the numbers, but you know, the more you get used to the numbers, then the more it becomes like routine. But if you're trading one lots, you know, you definitely have to, you know, pick your spots. And then if you're gonna double up, you know, you're doubling up. You're increasing your risk 100%. That's the hard part. And that becomes very tricky on your mind to do, to start trading it and keeping it like you would one lot trade.
Well, I know when I go back and I analyze everything, you would be money ahead taking the loss, getting in at a lower level or upper level, and taking another trade.
Right.
Than you are doubling down.
Yeah, I agree. Take the loss, move on, then take a step back, recalibrate is the new word that the
Yeah.
Fed is using. Recalibrate, you know, get a clearer mindset. If we come up to another level, you know, then okay, get that in, go into it like with a clean slate, and then that way, you know, again, remember, our thing is our thought process here is that if you have two losing trades in a row, your next trade better be a good one, or else you should stop trading. Right? So, you know, what we like to do, so we don't get ourselves into a really deep hole. You know, so that is something that you know, we try to talk to people when we start talking about trading who have any education with us. You know, we talk about how to manage those trades so that you can, you know, have a clear mind every time you put on a trade instead of getting caught up in a bamboozle trade and getting yourself in big trouble. Try to keep you out of trouble. That's what we try to do. All right, you can see here the market is actually kind of quieted down a little bit. It's consolidating, I think would be the right word here. Yeah, I mean, your next trade has to be if I'm trading and I have two levels that kind of ran through right away, there's something up with the market because we never usually get two levels that run through us really quickly. Very rarely levels in a row that kind of run through us. Something's up. So you have to recalibrate there a little bit, kind of step back, see what's going on, let the market kind of maybe there is some outside influence. Or remember, I said that fundamentals trumps technicals. So you know, if we run through a couple levels like hot knife through butter, something's up that we don't know about, and the technicals don't mean anything. So let's wait till the technicals come back into play. We can see something that we've done before that works, and we know, okay, things may be coming back to normal, or technicals are becoming a little bit more important than they were like 5 minutes ago, which again should happen because technicals, we trade technicals 90% of the time, but the fundamentals, the 10% of the fundamentals take over, create some crazy volatility.
I run into these dilemmas where I have targets above and below, and it's kind of like, okay, we're sitting right in the middle. Where are we going?
Yeah. Again, those are times when you have to say, okay, I have to maybe not trade because I don't know what it's going to do. I don't know if it's going to rally. I don't know if it's going to break. And we get that when we get to a level and we just miss a level and it starts to, you know, point to a momentum trade against that level. So one is telling you to buy and the other one is telling you to sell. So, or vice versa. And so you have to say, okay, well, I don't know what I should do, so I'm not going to do anything. And again, that's part of trading. Not doing something is trading, right? To decide not to trade is trading. To decide not to put on a trade is the same thing as putting on a trade. We decided to make that decision as far as the trade is concerned. So, as a trader, that's what you're here to do. You're here to make decisions. That's what trade you should do. That's what you're trying to do.
Nice thing about Fed Day, it's moving fast enough is you don't have to be right much.
No, but damn, sometimes it won't let you be right at all. And it costs you a lot of money on those Fed Day. Again, like I said, I stay away. I tried. I really did. I tried to trade those Fed Days. Now, just leave that up to you.
The other day, I put that trade on right there before the announcement. It come open, and all I saw was it going down. The next thing I know, I'm up 20 points. I said, "Get me out."
Yeah, I know. And it went. Literally, it was down. It went from 80. It went from even down to 85 back to 20. That fast.
Yeah.
Literally that fast. Went from even down to 85 to 20. Just as quickly as it said. Even faster. What just happened? I mean, I know what happened. But it was still, oh.
I mean, you put the trade on, you didn't even have time to put the stop in.
No.
It's kind of like, at that point in time, you just move over to the get me out button.
Yeah. I mean, because you're up 1,000, you could be down 1,000 just as fast as you're up 1,000.
Yeah.
I mean, but that's why it's so difficult to trade, because you think you got. The thing is, you can't even get out. I mean, you can't move your price, your ladder ticket quick enough to find an exit strategy.
I just punched the button.
I know, but you don't know where it's going to fill you.
Yeah, yeah, that's true.
you have no idea where it's going to fill you. You just don't know. Then you have to go back and look. Wait, that was what? How did that happen?
You talk about pure luck. I was laughing after it was over with. I said, "You know what? That was pure luck."
Sure. But you had a position on there, a number that.
That was pure
God,
stupidity.
I'm not saying that. Yeah, but DL, you cannot set if you set your brackets to your stops, and there's a number, it doesn't mean that you're going to get filled at your price. Okay, you're not. I don't know if you know that or not. Let's say if you have so I mean, why even, like, at that point, why even put that in there? It's not going to help you.
I actually had a target from that morning. I felt like they were going to go get that target because we had been fighting all day long trying to get back to it, and they wouldn't let it go.
Mm-hmm.
And I said, well, it's like any trade. You put it on, and if it doesn't work out, you just got to cowboy up and get out.
Mm-hmm. See that terminology? Cowboy up and get out.
That's it.
I don't think the Fed is ever going to use that, but we will use it here. That's called putting stops in there and getting out. Cowboy up and get out.
That's it. If you can't stand the heat, don't get in there. But you also, I mean, when you go back and you look at a 1 minute chart, that thing is moving.
Oh my God, I can't. How does it even stay on your screen? Because
at that point in time, I've got a target already set in up there, and I was already long the position, and it just won't. And it blew past that target, and I'm going, I should have stayed in. And I'm going, no. And then the next thing you know, I'm getting short during all this mess.
Right. Well, of course, that's the thing. You think, okay, it stopped. It breaks 10 points, and then all of a sudden you're 20 points against you.
Oh, yeah, 20-point swing's nothing in it with a Fed announcement.
Yeah. I was watching it, and I've learned to stay out of it. I don't know how I stayed. I don't even know why I was watching it. I wasn't playing golf that day. That's the problem. My golf day got canceled, so I ended up having to stay. And I was so good. I didn't trade. I was so disciplined.
There we go. We finally got to that bottom target. Should have did that yesterday.
Next support level we have is down at 37.
Yes, very, very large. Most, I don't know this for every Fed day, but the last Fed days, I mean, they open it up and they sweep it up and they sweep it down and they'll take a direction.
Yeah, every time I think that, though, that I think, okay, it's going to sweep back up the other way or down the other way, it just doesn't sweep for me.
Yeah, but usually if it sweeps, it's a huge outside bar.
Yeah.
Did you get down to 44.75?
Yep.
Okay.
All right, so the next level we're looking at is down at 37. Hope everybody has a good weekend. Made a little bit of money today or this week. It's definitely busy. Well, obviously, yesterday was busy. Again, having to expand your stops, if there's too much pressure on you, that's okay. We always get back to where things settle down and things slow down. And you get, quote unquote, normal trade. I say that for a reason, because that's how it happens. So the volatility is too great, and you just throttle back.
Have a good weekend.
Yeah, you too. Everybody have a great weekend, and talk to everybody back on Monday. Wayne, thanks for helping out. Appreciate it, everybody. Have a good weekend. Trade the rest of the day. Be a little bit patient. And see what happens there. I think there's some good support on it. 57 in that area.
Hey, quick shout and welcome to Eric V. Hey, Eric, welcome. Hey, Eric, give us a quick sound check. I just sent you out our welcome message in chat. Check it out. Viviana, you're back. Let me know in chat, Viviana. For those that are joining us through our socials, join us live at daytradingmarkets.org. Join us for our daily coaching session focused on the S&P 500 E-mini. This is for new traders and experienced traders that are looking to develop income for themselves. We teach and mentor a price action trading methodology here. It starts out with laying key levels right around the cash open and working the market from there. So, all right, quick sound check. Use the chat feature to respond. Viviana, the same. For those that are joining us through our socials, like us, share us, repost us. Friend us, heart us, find our home base. We really appreciate you helping us get out of the box based on the algorithm, so whatever you can do is great. Use daytradingmarkets.org as the URL. Thank you. I'll be popping in and out, but take the time to register as our free guest, daytradingmarkets.org. Okay.
At least 50.
Hey, quick shout out, welcome to Gianni. Hey, Gianni, welcome. I'll send you out our introductory message. It's a brief overview about what we do here and what the opportunity for you are as a newer experienced trader. I'm sending it out to you in chat form. It's out to you now. Take a read. We're at the end of our morning session here. We're doing one-on-one coaching lessons in the background. Once you go through the opportunity list, let us know what you're interested in, what your status as a trader is. We'll take it from there. Those that are joining us through our socials, like us, share us, repost us, heart us, friend us, help us get out based on the algorithms. Use your wisdom and how to do that and help us out. It's greatly appreciated. And Johnny, let us know, A, if you hear us, B, that you got our message, and just let us know how we can help you moving forward. And again, welcome aboard.
At least 50.